So I'm delighted to be with Manish Kataria this afternoon from Invest Like a Pro. Manish, this is one of the most fascinating times in history. Lots of changes have taken place in the last 2 years, since March 2020. Of course, changes take place all the time. We're going to discuss in this short video about the uncertainty in the market right now and where you think the market will be heading as well. Manish, your background is in the city. When we say the city, we're specifically talking about the City of London, the financial square mile. And let me just get the company right. You were based for some time ago, JP Morgan?
Yeah, that's right. Yeah.
You're still working in the city, but not on a day-to-day basis. So do you want to just introduce yourself a little bit as well? What have I missed off there?
No, that was a good intro. Thank you, Brendan. Thanks for inviting me on. Yeah, so my background is investment management. So I was, JP Morgan. I was managing the bank's money and the pension fund client money, managing equities, global equities, private equity, fixed income, some options and derivatives. So those are my sort of main asset classes. And I was a professional investor, doing things like, due diligence, risk management, diversification, and, those kind of things.
And that classification would be called an active investor.
Yeah, correct. Yeah, active equity investing. Yeah.
Whereas your strategy now on a monthly basis or quarterly basis or annual basis is passive investing.
Yeah. So, it's not quite clear active v passive, but in terms of what I'm helping investors to do now is to sort of help them in the asset classes which are passive investing in nature. So really the best way to think about it is not property, because a lot of my investors are property investors, but they're also looking to diversify into other asset classes, other asset classes that don't require them to be sort of, hands-on with tenants and tax issues and things like that. And look, I own property myself. I think it's a great asset class, but I think a lot of people are maybe too concentrated in property, and they need to sort of think about other asset classes to kind of diversify their risk in many different ways.
So Manish, we've briefly looked, and we're going to go, or you are going to go into a lot more detail on the evening of the 31st of March 2022. So London Bridge Hotel, tickets are still available, beaconevents.com /events. Now, what's on the tip of most people's tongue, most people thinking, are we going to go into a recession? And there certainly is uncertainty in the market that is certainly significantly different to 3 months ago. I know from a personal experience, and lots of times it is from a personal experience. When I walked into my sandwich shop the other day, they said it's gone up another £1 or another 50p. Okay, it's not going to be breaking the bank, but literally then I had experience of other things which have gone up in price as well. Then I got an email from my hotel, which I use for the venue, for the monthly events. It's going up in price. So it's not just goods which are going up in price, it's also services as well. So huge uncertainty in the market. I don't want to say you're bullish, but you're positive. You don't think it's going to necessarily lead to a recession?
Look, no one really knows, because I think the questions you're asking are about inflation, but they're also about what's caused that inflation. So the first issue was COVID and the supply shortages related to, the back end of COVID. And then we had the Russia-Ukraine situation, which caused, oil prices to spike, metals prices to spike, wheat prices, and all the rest of it. So, we're somewhat sort of trying to second guess what's in Putin's head, and also trying to second guess what's happening to COVID and all the rest of it. And there are lots of uncertainties. But look, all we can do really is kind of look back at history, right? And when we look back at history, COVID was slightly different because we'd never really been there before. So there was huge uncertainty. This time 2 years ago, markets were, absolutely getting slaughtered. And this time it's been a bit more measured in terms of the Russia-Ukraine situation, because we've had lots of wars before, we've had lots of military conflicts. And if I look back to see what's happened during those military conflicts, most of them, I mean, nearly all of them, we've come out in a more positive way in terms of the stock markets. There's always some initial volatility, but we come out higher. And the initial fears of recession and global issues have not really borne out, right? So this time, if we use history as a guide, this hopefully should be a one-off event, and it might prolong for a while. As long as Putin doesn't press the red button, I think we say in the markets that markets climb a wall of worry, right? And that applies to property as well as markets. And there's always a wall of worry. There's always conflicts. There's COVID. There's interest rates. There's unemployment. And a couple of years ago there was all this issue about furlough, and people were trying to pin excuses to where they think the markets were going. And I just don't see evidence for a prolonged recession, right? So, the final thing I would say is that recessions can be caused in a number of ways, but one of the common ways is if interest rates go up too much, and if there's a banking crisis. Those are the two big factors which we really should be concerned about.
And of course, in 2008, we did have that banking crisis.
We did, and that caused a huge, collapse in asset prices all around the world.
And you were saying to me off air, and literally we were going, or you will be going into much more detail on the 31st of March in London. It's not quite the same as 2008, or significantly different, because banks don't have that shortage of credit.
Yeah, that's a good point, actually. So, banks are in a much better state now than they were in 2008. And banks are so critical to the workings of the economy. And because they've been asked to clean up their act since 2008, they're in a better position. So we don't need to worry too much about the banks. What we do need to worry about is inflation, as you've already mentioned, and the impact on interest rates. So, we had the Bank of England who came out and raised rates the other day, but they are now sounding more cautious than they did before, because they're worried that they're concerned that they don't want to overdo it. One of the biggest fears out there is there could be a policy mistake by the US or the UK. I think they're very, very conscious about not making a policy mistake, and what they really want to do is get interest rates back to normalized levels as soon as possible. And in the UK, we are now back at pre-COVID levels in terms of interest rates. So I think look, I'm reasonably positive on the longer term outlook. No one really knows what's going to happen in the next couple of months, but use any volatility. And I always say this to my investment academy attendees, use any volatility as an opportunity, because you'll look back at this period of time in 6 months, 12 months, 2 years time. You look back and you think, wow, wish I'd capitalized on this opportunity. Just like now, people are looking back at the COVID volatility and they were wishing that they'd capitalized on that volatility. So these things are always opportunities. We just don't know it at the time.
Manish, I promise it would be a short video. Anything in the last 90 seconds you want to emphasize? I know you're looking at passive income for your clients, and passive income for your clients doesn't necessarily mean property.
That doesn't necessarily mean property from what I'm showing them in terms of how to invest, because there are lots of people who are educating people on property, and I don't really want to get into that. I mean, I'm a supporter of property, and I always say to my investors, look, be diversified, have your property exposure, but also think about other potential asset classes. So I focus on property, stock markets, and I focus on options to generate regular monthly recurring income, which not a lot of people know about, but options are a great way to sort of generate passive income. And I'll talk more about that on the evening.
And just for the listeners out there, it's not something I normally cover at the monthly events, the looking at options, looking at the stock market. So it's almost like a unique experience for the year ahead. So as I say, it's on the 31st of March. Manish, I just want to say a massive thanks for your time this afternoon, and also coming up, as I say, at the end of March. So look, I know there's lots of questions, and the best place to be is at London Bridge on that particular evening. So Manish, I just want to say a massive thanks to yourself, a massive thanks to our listeners as well.
Thanks, Brendan.